Thank you, Mr. Chairman, and I sincerely appreciate the opportunity to testify here. And thank you for holding this important hearing on this important issue. I want to thank Ranking Member Toomey in particular for his leadership and work with my team on the bill that's already been described, Investor Democracy is Expected Act, or the Index Act. And I want to thank other members of the committee. There's several here who are also co-sponsors of this bill. Mr. Chairman, I'll be frank with you. You and I have talked about it. The impetus for this legislation was due to my ongoing frustrations with many of America's largest banks and insurance companies that undertook policies to start blackballing oil and gas investment development in Alaska, and in my view, blackballing the proud American workers who do this very necessary work for our country. We need energy. While at the same time, these financial institutions, banks and insurance companies were eagerly and continue to eagerly do business with communist China. Blackballing American energy workers, no problem with investing in Chinese communist activities. Why are they doing this? Why were they doing this? Well, I found out these financial institutions do this in part because of pressure from their largest shareholders, the big three investment advisors and their index funds. In time, my Alaska-centric frustration uncovered a much larger concern that many of you have already described today about the sheer power that is consolidated among the three firms that were already mentioned and the massive distortion in our public markets that it creates. Here again are the astonishing numbers that were already mentioned by Senator Toomey with regard to BlackRock, Vanguard, and State Street. They manage around $20 trillion in combined assets, are the largest owner, shareholder in around 90% of the S&P 500, and cast nearly 1/4 of all votes at annual meetings for public companies in America. These numbers were even larger before the recent market correction. In many ways, as you mentioned, Mr. Chairman, this is a success story. Investors are benefiting from greater diversification and lower fees. However, there have been unintended consequences, especially the unprecedented consolidation of ownership and voting power of these three firms. These companies wield this market dominance through behind-the-scenes engagement with company management, and they can steer our public markets towards policies that they or others prefer, bypassing political accountability of our legislative process. This should concern all of us, regardless of political party. Some may like or even applaud the positions these entities currently advocate for, but as we have all seen, leadership at these kind of firms can change. Just look at the ongoing Twitter saga right now. At its core, the Index Act is politically and policy neutral, focused instead on the very real and unprecedented power amassed by the big three investment advisors that should be a concern of us all.